Hi there, my name is Nick Hawkins. I'm an independent financial advisor and director at NH Wealth. And today I'll be talking about 7 ways a financial advisor can add value. The team at Vanguard have done some really interesting research in this area, and they have found that on average, financial advisors can add 3% of value for their clients each year. Clearly, no two individuals are the same, and this figure will vary from client to client and year to year, depending on the client's age, whether they're married, if they have children, and the amount of tax that they pay. Personally, I think this is quite a conservative figure because it doesn't consider the peace of mind and time savings that a financial advisor can bring. Vanguard have broken down this value into 7 different factors. The first factor is behavioural coaching. Now, as humans, we all have inherent biases, and these can range from loss aversion, framing, anchoring, overconfidence, and confirmation bias. It's really difficult to eliminate these biases altogether, but as financial advisors, we try and make clients aware of these biases so that they don't get in the way of their long-term financial plans. The second factor is asset allocation, and this is to do with the amount of clients' portfolios invested in equities and bonds. It's generally believed that the higher the equity content of a portfolio, the higher the risk, so it's important that we get the proportion right between equities and bonds for our clients so that it's matched with the client's attitude to risk and capacity for loss. It's widely believed that asset allocation accounts for about 80% of investment performance, with the remaining 20% down to market timing and stock or fund selection. The third factor is cost-effective implementation. Now, costs count towards a huge amount when it comes to investment performance, and these will compound year after year. So we, as financial advisors, will try and keep costs as low as possible for clients. We won't always choose the cheapest product or service. It's all about finding those that are suitable for clients and represent the best value. Rebalancing is linked to asset allocation. So if we take a typical medium risk portfolio that may have 60% invested in equities and 40% invested in bonds. Now, because equities and bonds tend to move at different rates, that 60-40 portfolio may drift over time to a 70-30 portfolio, with 70% invested in equities and 30% invested in bonds. So what we would have to do is to rebalance that portfolio in line with the intended asset allocation of 60-40. The fifth factor is spending strategy, and this is relevant for clients approaching retirement because that regular monthly salary that clients will stop in retirement and will need to be replenished by income from the assets that they have accumulated during their working life. And it can make a big difference in the order in which clients access their investments, whether they draw down from their general investment account or their ISA or their pension first, can make big differences from a tax perspective. The sixth category is asset location. Now, at the time of recording this presentation, we have different tax rates in the UK from whether dividends are received or bond interest is received, and we also have a different tax rate for capital gains. So we need to make sure that the right assets are invested in the right wrappers to take advantage of these differences. The final category is total return, and this is to do with the return that's generated through income from dividends and bond interest, and the return that's generated through capital gains. Now, if we take that client who is approaching retirement as an example, they may naturally be drawn towards those higher income generating assets to replenish the income lost from that regular monthly salary. But it's not always the right choice to do that, because what we try and do is try and get a good balance between income generating assets and those that are designed to or geared towards capital growth to get the best outcome for clients. So I hope you've found that useful in articulating the benefits of using a financial advisor. I have provided my website and email address. I'd love to hear from you if you think we'd be able to help, or if you'd like a second opinion on your finances. Please don't hesitate to get in touch.